for federal government tax, you can go to the website www.ato.gov.au. It will explain a lot of things in there. But what I'm explaining to you here is sort of like an overview and give you a very good understanding of what's Australian tax systems like. So for federal government, they collect income tax. And we as a resident in Australia for tax purposes, we have to pay tax for income that we earn in the Australia and also overseas as well. So in and outside Australia, we have to pay tax on our income. But if you are a non-resident, then you only pay tax of the income that you earn in Australia. It's different tax rate apply for resident and non-resident as well. So income tax is one thing that they collect. On top of that, we have to pay Medicare Levy. And Medicare Levy, they collect its 1.5%. As you know, we have very good health system here. So the government collect 1.5% of the taxable income to help fund the Australian health system. But they give you exemptions. So if your income, say if you are a single and your income is earned less than 18,839, then you don't need to pay Medicare Levy. You get exemption. Or if you have a family, a couple, then if your income is below 31,789, then you don't need to pay the Medicare Levy, the 1.5%. And if you have more children, then you're allowed to earn more income before you get hit by that 1.5% of the Medicare Levy. But they also give you, if your income is high, say for example, if you are individual and if your income is more than 80,000, then you need to have a private health fund. If you don't have a private health fund to cover you, then they will surcharge you another 1%. So for people single income earning more than 80,000, they must have a private health fund. Otherwise, they have to pay 1% surcharge. And for family, then you're allowed to have, if your income is about 160,000, and for each child you add 1,500. So if your income is about that, then you need to have a private health fund. Otherwise, you have to pay that 1% surcharge. So that means that you're going to pay 2.5% of your taxable income at the end of the year, and that is a lot. That is a lot of tax. And then you have capital gains tax. So capital gains tax basically is like if you sell your assets, like if you have an investment property and then you sell it and you make capital gains, then you have to pay capital gains tax. But it will depend, like if you hold that property more than 12 months, then if you make a capital gains, you can have that 50% discount. So you pay less tax on that. But if you hold it within 12 months, then you're going to pay the whole lot added to your marginal tax rate, and then you have to pay the tax on that. But there's an exemption. So if you don't need to pay the capital gains tax on your own house. So if your man, everybody will allow to have one house, one man resident. And we don't, if we sell, say if I have a house worth $1 million and I sell it, I make profit, I don't have to pay capital gains tax on the house that I live in. So that is very good. And that's why with the main resident, we always try to keep that into our own name. So we don't have to pay the capital gains tax and we don't have to pay land tax. Because if it's actually, if people own the house, but they own it in a trust or in a company or in other structure, then they can't get this CGT exemption. They can't get this capital gains tax exemption. Okay. Then we have withholding tax. So withholding tax is if you have to pay interest to a non-resident, then you have to withhold 10% withholding tax on that. So that's the withholding tax. And then you have customs duty. Is like when you import stuff from overseas, then you have to pay customs duty. Then you have the excise duty for alcohol and tobacco. Then you have fringe benefits tax. And this is like if you have a business and if you are a boss and then you buy a car and you let your employee drive the car for private use, then the employer have to pay the fringe benefits tax because it's providing a private benefit, a fringe benefits to the employee. So they're going to get hit with the FBT tax. So there is a lot of tax, as you can see. And then there's a GST. GST is 10% of the goods and service tax. And if you are a business owner and if your turnover is over 75,000, then you need to register for GST and then you have to start collecting the GST. So I have a different topics on this GST. It's another sort of quite a complicated subject, but what I want to do today is I just want to give you an overview of all the taxes that in Australia. So if you know this, you are about the average of people that sort of understand what sort of tax that you have to pay in Australia. So that's the federal government collects those tax. Then you have state tax. State tax is like if they collect gambling tax, land tax. Land tax is quite a big hit. Like if you own a lot of property in this country, then land tax can kill you. Land tax is a really, really high expense there. And payroll tax is like if the company employ a lot of employee and their wages is over a certain amount, they have to pay payroll tax. Payroll tax is different from a withholding tax because some people will say, I already pay tax for the employee. Why do I have to pay the payroll tax? Payroll tax is different. Payroll tax is collected by the state government. So it's a different tax. If your wages is about certain level, then you have to pay payroll tax. And stamp duty. Stamp duty is really a big expense for say if you're buying a property and normally you pay like at least like 3% on the, say if you buy a property for 500,000 and you have to pay stamp duty, say 3%, that's 15,000. So if you keep buying property and changing property all the time, at the end of the day, after you pay the capital gains tax and stamp duties and so forth, you virtually make nothing. So that's why it's very important to know how to manage all these taxes. Otherwise, at the end of the day, you just work for the government. All your money will go to the government. You're going to keep nothing. So it's a big killer for wealth creations, and that's why we are here to help people to minimize their tax legally and pay less tax. So that's the Australian system. And then you have local government tax. It's like council rates is for them to come and collect the rubbish for the household. So they look after all the local stuff. So that's virtually on the nutshell of the Australian tax system. Okay.